Good morning. How many of you still use branches? Yeah, not many. But then again, you work in banking. Reality is more than 60%, yeah, 60% of consumers and businesses still routinely use branches. But branches are expensive. Median cost is $2.5 million, and they're fixed. Once you build it, you can't pick it up and move it. For more than 20 years, Bancography has helped banks and credit unions build branching strategies, including with Bancography Plan, our software tool that takes the risk out of branch planning by providing sound demographic, competitive, and financial data to support your decisions. Let's look at a site in Jenkintown. It's an inner suburb that any bank would consider as part of a Philadelphia expansion strategy. I'm going to type the address here, but you can also set the address via point and click on a map. And based on the surrounding population density, Plan is going to recommend a radius of 1.9 miles. Now, you can override that. You can even paint a polygon on a map because trade areas aren't always radial, and sometimes rivers and highways get in the way. But for today's example, we'll look at the 1.9-mile radius. You can see there's 22 competing branches of 16 different banks and credit unions in that area, holding aggregate deposits of $4.6 billion. You can see their 10-year deposit history here. We can look and see that the market holds 19,000 households, projected to grow by 3% over the next 5 years. It's affluent with median income near $110,000, skews older with median age of 56, holds robust commercial demand from 1,700 firms employing 2,500 workers. You can see them listed here by primary SIC and sales tier. You can even order a list of these businesses for use in your branch's initial prospecting efforts. That noted, it's the picture that's worth those 1,000 words, and so we can view the branches on a map here. You see them mostly arrayed along Old York Road here. This is Google Maps, so we can learn lots about the market. Trader Joe's and Target to help draw clients to our branch. We can zoom in and learn more about any competitor. Penn Community has grown from 43 million to 56 million in deposits in the past few years. One click shows more financial information about that bank's performance overall. And again, in Google Maps, we can go to satellite view. We can even go all the way to street view to check out our competition. So, for example, there's that PNC, good-looking branch right next to the Wawa. Can't do better than that in Philly. Beyond our time frame today, but you can also plot your customers on a map to see what coverage we have of the neighborhood already. Stop by the booth and I'm happy to share that capability. But ultimately, if we don't drive to a full pro forma balance sheet and income statement, we're really just making our decision on vibes only, and that's not good enough. And so that's why Plan forecasts a likely share penetration target of market demand. And from there, we can then set some parameters about the branch. This cost looks a little bit low for land in this market, so I'm going to bump that to $1.1 million. And construction costs have gone up, so I'm going to raise that a shade too. We can set our personnel costs, the rates and spreads on our products, even what business sectors to include. And from there, one click gives everything we need to take to our CEO to say, this is why our next branch should or maybe shouldn't be in this market. Now, the pro formas are available as a report, but we also produce them in Excel because every banker knows Excel, and that way you can easily change assumptions or customize the model to your needs. Plan uses both public and internal data sources in a segment-based model that translates market demographics to aggregate demand. We multiply that by the penetration estimate to get the 5-year balance forecast you see here, 49 million in deposits, 24 million in loans. Run that through the expense structure we outlined, and you see the branch turns positive in year 3, 15% 10-year IRR, 41% efficiency ratio. Pretty strong. We also have here our demographic report, first for the 1.9-mile radius and then for Montgomery County overall, and you can print or email any of these reports. This report lists every bank and credit union competing in Montgomery County, its current branch counts, deposit share, deposit growth history, and we can see the market aggregate overall there, right? $42 billion market, up $9 billion in the past 4 years, 300 branches. And then here we list each of the individual branches in the trade area and their deposit and growth history, even keep a record of the closed branches there. Now, you may prefer to grow via merger, and for that, Plan can map the complete networks of up to 6 institutions at once so you can visualize how the franchises fit together. And we can also evaluate mergers financially. For example, if we were to merge these 2 banks in North Alabama and consolidate any time where they have branches within 2 miles of one another, well, that's going to yield, as the financials arrive here, institution that has combined assets of $5.2 billion, combined deposits of $4.5 billion, and operates 85 branches. But there are 15 cases where the banks have branches within 2 miles of one another. So if we close the smaller one of those branches in each case, we can forecast runoff as a function of proximity to the nearest surviving branch, surrounding population density, and what we see is that we're putting at risk $22 million in balances, $1.1 million in revenue, but since we can, against the, compared to the NIE savings from closing 15 branches, our efficiency ratio still more than offsets, goes from 71 to 69%. Remember, lower's better there, and our ROA bumps up 8 basis points to 136. Plan offers other functions too, one-click market share reports like what I showed for Montgomery County, for any county or MSA in the nation. With fine target markets, you can work in reverse. Show me any submarket in Detroit where median income is greater than $70,000 and median age is younger than 45. Branch profiles can produce demographic and competitive and performance versus potential reports to assess your current branch performance and help in their marketing. And we even have the ability to forecast attrition from potential branch closures. In sum, Bancography Plan helps you reach the optimal decisions in branch planning, whether via branch opens, closures, or mergers. Annual licenses start at $7,000, site license, not seat license, unlimited users in the bank. Large banks with more complex needs can upgrade to our branch network optimization toolkit, where you can run demographics and financial projection reports like these for hundreds of submarkets at once to quickly build a region-wide or even nationwide branch strategy, both opens and closes. NYCB Flagstar, if you're in the house, you need this. Come see me at the booth later on here. And to any banker or consultant who would like to learn more, please stop by either at the exhibit hall here later on today or get in touch with us after the show. Thank you.